Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 8th of April and today we have our guest Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, coming to us out of Singapore. Now, Vishnu, it's always lovely to have you on the show.
Hi, Brian. Always a pleasure to be here with you, sir. So thanks for having me on today.
Now, Vishnu, for a start, let's take a look and see how markets have performed in the first half of the day across the region. We're going to start with the Straits Times Index. The Straits Times Index is down 0.04%. The KLCI is up 0.28%. Shanghai is down 0.21%. The ASX All Ordinaries is up 0.12%. The Nikkei is up 0.81%. The Hang Seng is unchanged. And rounding up the numbers, we've got the Kospi, which is up 0.29%. Vishnu, your views on market performance in the first half of the day?
Well, I think it's a pretty mixed market. I think markets are trying to feel their way around what to make of things. But one of the themes that has come through is, I think earlier on when we saw strong US numbers coming out, markets were quite happy with a so-called Goldilocks scenario where they get a soft landing or better still a no landing scenario, and the Fed can still cut rates. But I think increasingly they are now fearful of two things. One is if indeed jobs and inflation numbers come out hot. So we are pegging this off the really hot jobs data that came out last week.
Yes, which was well above expectations. So expectations, just for the audience, just over 200,000, but came in at over 300. Came in at 303,000.
That's correct. So you've got a outrun of 100K, and then markets start thinking, what if this starts to not just defer the Fed rate cuts, but perhaps diminish the cuts? So you get fewer cuts than earlier suggested or earlier priced in. So markets are now beginning to think of one, is some disappointment with the number of rate cuts that could come along and all the associated pressures that remain in the system for longer. And the second part of it is, I think markets are also coming around the idea of Fed exceptionalism doesn't mean exuberance for all. You could feel the pressures outside of the US, given how connected US rates and a strong dollar may be permeating through the global system. So now I think, people are looking around whether everybody has indeed gotten the invite to the bull party or not, and rethinking whether they need to, readjust their positions. So that's one factor. The other factor, of course, is elevated oil prices and I think some dynamic reconsiderations of what that means. On one hand, the news flash that Israel has pulled out of Gaza or is withdrawing troops provides some relief. And that means that oil prices have now receded from earlier rallies well above $90, testing 92. So Brent prices have slipped back below $90. But there's also this sense that, this is very, very fleeting relief, because if the central position for Israel is to mount pressures on Iran that they deem to be the main threat, then the situation in the Middle East means that the threat of conflict spilling over more widely with impact on both production and passage of oil, that scenario must only mean that until there's some clarity on that, upside risks to oil could be somewhat more elevated. And I think that's the other thing that markets probably need to dynamically reconsider as they look at the wider situation. All of this put together means that everyone else who had hoped to cut their own policy rates to ease policy, whether it's the ECB or a central bank in Asia, all of these people will have to take a step back and say, perhaps we need to sit on our hands. Trouble is, it's hard to sit on your hands at the same time that you want to wring your hands as well. So there's a lot of hand wringing going on as to when we'll get some kind of relief here.
Now, okay, Vishnu, I want to unpack two things from you. One is around oil prices. Second thing is around what you've mentioned in terms of central banks. Now, first one, oil prices. You've talked about the geopolitical risks, but what are you seeing from the data around inventories and demand?
Well, I think that's a really good way to look at things, because if you just look at the macro picture, which is, and this is a really zoomed out lens, you're thinking of US's ability and proclivity to produce a lot more. So the US is trying to do record productions, outpacing Saudi or Russia. There's a US election, which means typically they want to keep oil supply very flush. So the prices are low. You don't get the consumers getting upset. But in the very near term, two things have happened. The cold snap earlier this year meant that US production itself was a bit lower. And there's also been all this little supply risks that come about. Mexico holding back on exports, Venezuela, the political situation not allowing for sanctions to be lifted in a bigger way. So it's like it's death by 1,000 cuts. So all this, and no pun intended in terms of the cut in production or exports, but really all this have added up such that it's offset the US supply bump up effect. And that has led to the supply side, whether it's inventory or what comes to the markets in terms of exports, being somewhat tighter, which has kept OPEC in a position where just by maintaining their current curbs, they're probably putting the floor on oil prices slightly higher than otherwise. There's an illusion of OPEC control, but to them it's beside the point because they get the prices that they want anyway.
Yes. And now the second thing is we've got a slew, and it's related to central banks. We've got a slew of central bank data coming out this week, policy decisions and stuff like that. What are the things that come to mind for you that will move markets?
That's going to be a hard one here because, as you said, two things that we need to grapple with. One is tracking one headline to another. We are probably going to get confused between central banks, right? The other is really seeing what matters to them, because I think central banks, let me do a really crude, no reference to the crude oil earlier, but let me do a really crude, broad brush on this. I think by and large, whether it's the ECB, the Bank of Korea, the Bank of Thailand, the Philippine Central Bank, or the MAS, they're all going to sit on their hands and say, we're not doing anything this time around. But the circumstances facing individual central banks, there would be important nuances. Our sense is that the ECB is getting closer to a cut, but they want to watch more data. So June is very likely. How they convey this message of increasing comfort with the cut soon, but at the same time acknowledging that all these volatile factors, including oil that we just discussed, means that they would be very data dependent. The way they phrase it can see very different market reactions. So whether the markets read this as a dovish hold or a less dovish than expected hold, I think that would tell you how far up the euro can go. But by and large, we think the euro will be constrained by the fact that US has exceptionalism and Europe simply doesn't. In our region, I think one of the two things to take note of are which central banks see higher risks of currency instability amidst vulnerabilities to both food and not just energy, but food and energy prices. So the BSP will probably have to sit on its hands, even though the governor has said that they can probably move ahead of the Fed. But I don't think there is much wisdom in doing so. And so without acknowledging that, I think they're going to sit on their hands. MAS already has got very tight policy conditions, so they can also sit on their hands. And Bank of Thailand, we suspect, can be the first to cut in this region, but not currently. I think this meeting will not be it. And how they set up ground to cut can lead to some Thai baht volatility. Similarly, for Bank of Korea, we think they can also move towards a cut soon enough, but not just yet. So how you convey the not just yet without undermining your currency, I think remains the challenging part for a lot of policymakers in the region.
On that note, Vishnu, thank you very much for your insights. Thanks for coming on the show.
My pleasure.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy from Mizuho Bank, and this has been BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out the show on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.